Hello, Deja.
Hey.
I gotta tell you a dad joke.
Okay.
What did the ranch say when someone opened the refrigerator door?
What?
Close the door, I'm dressing.
I think you should just stick with the money-wise FAQs.
I didn't even make that delivery better? All right, on to the FAQ.
And Sean, if you had to sit down with a prospect, somebody opening up a business, and they asked you about fringe benefits for their employees and how they affect payroll taxes, how would you explain that to them?
Great question, Bobby. There are lots of fringe benefits, and when we're talking about fringe benefits, we're not talking about French benefits. What we're talking about usually are those non-cash compensation items. There are a couple that are easy and pretty standard, right? If you have health insurance and you're on a pre-tax health insurance plan, that affects your payroll taxes because any health insurance premiums withheld from the employer is withheld before taxes. There's no federal income tax on that, and there's no Social Security and Medicare income tax on that, and there's no state tax on that. Things like retirement, your 401k, your 403b, your simple IRAs, those are also pre-tax on a limited basis. You still have Social Security and Medicare you pay on that, but if you're not using a Roth plan, you don't have federal or state income tax on those wages. If you're using a Roth plan, obviously all of that is post-tax. There are other fringe benefits that are your true non-cash compensation, gym memberships, group term life insurance that is taxable in certain conditions, other kinds of benefits, and those employees still have to pay taxes on.
How does someone pay taxes on something that's not being paid out in their net pay?
Yeah, that's a great question. There's a couple of different ways. We sometimes see with something like, say, group term life, which is taxable if you have a group term life policy on an employee greater in value than $50,000. Sometimes we see that with each paycheck for each employee, and the associated taxes are calculated from each employee. It's a small amount. The employee pays the taxes out of their other cash compensation, and most employees won't notice it. Sometimes those amounts are presented at the end of the year, and that's where it gets tricky. We see several different things. Sometimes the employer agrees to pay the employee's taxes. In that case, that becomes additional taxable income to the employee. Other times, the employee still pays all the taxes. They just pay it all in one lump sum at the end of the year. Sometimes it's on a bonus check or something else.
How would you suggest an employee look at that on their paycheck to know exactly what's going on a stub?
And that's where it does start to get a little more complicated, and it depends on your payroll company. You may see in some cases a fringe benefit where it's added in as cash compensation under your earnings and then removed as a deduction on the other side. The value of your gym membership goes in as $50 on one side, comes out as $50 on another side, and what happens in the middle is that the taxes are calculated. An employee who takes home cash tips is used to seeing that kind of thing. Tips go in on one side and go out on the other. Well, that's not a fringe benefit. You've already received the benefit. There's no cash to you in that benefit, so you're not going to see it in your net paycheck, but you are going to see it reported as an earning and then as a deduction. Other things like the employer portion of, say, a health savings account stipend or the employer portion of a match, you might just see on the earnings side as a memo item, right? It's reported so you know it, so it goes on your W-2s. It's really just a memo. It's really just a note. It has no taxable effect for the employee. And it really, on these fringe benefits, it depends, right? If there's a taxable effect, then it goes both in earnings and in deductions.
Is it common for a lot of employers to cover those taxes on certain fringe benefits?
I don't want to say that it's common. We know a lot that do, and we know a lot that don't. It really is the employer's discretion. And some of it is how long has the employer had the benefits. We know a lot of employers that have had, say, group term life is again the one that is most frequently associated on every paycheck. A lot of employers that have had group term life for a long time do it on every paycheck. The employee pays the taxes. They don't even know that's happened. Same deal with a salesperson who maybe is always receiving the value of the company car that they may drive. They may see that on every paycheck. The taxes are paid each time the employee pays that. Employers who maybe have either put in a new plan or for other reasons, they may report everything at the end of the year. Then a lot of times the employer will pay the taxes, but not always. Again, it's a mix and it's up to the employer. Part of it is just based on retention and what they want to do.
Our clients, of course, have us to reach out to when they want to add something new for an employee or make a change. But for people who don't have a payroll company or, doing payroll in-house, what tools are out there for them to access and have questions?
Great question. The IRS publication that we all look to first is a publication that's called the Circular E. It's called Publication 15. It has all of the details on how to treat all the various fringe benefits. It also has the current year tax tables available so you and know how to calculate withholding. But the Circular E, the publication 15 from the IRS's website, is your best first line of resource.
Thanks, Sean. I think that's very helpful for people.
Thanks, Bobby. If you have questions about this or any other payroll-related issues, please subscribe to our newsletter from our website or subscribe to our socials. You can find us on LinkedIn, Instagram, and on YouTube.
Feel free to also give the office a call and speak with one of us directly. We'd be more than happy to answer any of your questions.
My name's Sean.
My name is Bobby.
And this has been a MoneyWise FAQ.